All right, smart money, SMSFXMentor.com. All right, let's hop right into it. So today we're going to talk about the Fibonacci. All right, so the Fibonacci, we're about to look at the definition of the Fibonacci. And then what I'm going to do is show you how to look at it and use it on the charts, right? Now, remember, guys, keep everything else that I'm teaching you in mind, right? And plus, we're going to be dropping videos Monday, Wednesday, Friday, Sunday, and then we're going to start the week all over Monday again, right? So you're going to get back to back all day and all weekend, all right? So you want to tune in, you want to subscribe for that, right? So that way you can be able to get that notification in, cut on all notifications, be able to get that notification in when I'm on here, when I'm teaching, all right? So we're going to look up the Fibonacci, right? So I got the definition right here. I just looked it up, Google it right off my phone. Say after a big price move in one direction, the price will retrace or return partway back to a previous price level before resuming in the original direction, right? So pretty much, right, you already understand the bias, you already understand the flow of the market, you already did your due diligence, right? And therefore, you already have everything set up that you need to set up, all your influences and this, therefore, then you pull out the Fibonacci, all right? Now, we've seen the definition on Google. We're finna pretty much give you straight up definition, my definition, all right? Which is it's the same definition, but I'm about to pretty much show you how you can start taking advantage and using it on the charts. So pretty much, right, you already understand the flow of the direction. And what you want to know is the 100% of price movement. So you want to know that, okay, if price shot in 100% of what it is, right? So what price is 100%, what you want to try to do is catch it at a higher price, right? Before it goes down, right? So in all reality, right? Boom, you seen it drop, right? Boom, you're like, okay, boom, it dropped. Okay. Now, is that 100% of the move? Usually 100% of the move, price, literally if it's dropping, it'll start coming back up, right? So what you essentially want to do is catch price like 50% off, 60% off, 70% off, right? You want to look at it like in percentage wise, right? And like I said, I'm gonna show you what that looks like in a minute, but essentially you want to catch everything half off, right? So like I said, if price is already dropped and it went to his 100% push of his point, what you want to do is wait for it to pull back, at least back down to 50% halfway, 60%, 70% back up. So that way, when price continues to go back down, you can catch it at a good number to where you can make a lot of money, right, in the market, right? So like I said, I want to show you guys two examples. And we'll go into this later. This will be like advanced down, but right here you can kind of see a head and shoulders pattern. So right here we got a head, we got a left shoulder, and we have a right shoulder, right? But we're not even going to talk about that. Let's just use the Fibonacci in that area, in order to see what's pretty much going on here. Like I told you guys, remember, every strategy works. And the more you know, the better off, because at the end of the day, you will be able to understand and see a lot more things in the market to where it'll give you more and more confluences to be able to enter in and not be scared to make some money, all right? So now, look, we got a head and shoulders pattern, right? But we're not going to even talk about that. And then we're going to do a replay, right? So we're going to go ahead and click this arrow here. And then, I want to show you exactly what I mean by how powerful this tool is, and how you can use the Fibonacci to literally execute a lot more trades, right, in the market, and not be so much as scared to actually try to take a trade. All right, so now we're gonna go ahead and do that. We're gonna try to slow this button down. We're gonna try to get it slow. I hope that's slow. I hope that's not fast, because I want to show you, like, so okay, we see price drop, right? So price dropped, it went down, right? And then we also see price pushing back up. So this is right here, another way where you will try to pull the Fibonacci out to see if it'll pull down or whatever, right? But we also got to respect other things. So like I said, as deeper down into the market, we just want to go ahead and show you um, um, how this example actually can work off and can show you how a lot of the times, stuff can get you stopped out as well. So like, just like say, the Fibonacci, we try to use it here. Let's just say we try to use it here, right? I can show you ways how you can get cooked, and then I can show you ways how it'll be better for you, right? But understanding that it's a lot to it in the market, that's what'll keep you out of like trades like this. But let's just say you're a rookie and you just wanted to use the Fibonacci, right? So now essentially what should happen is, right, price just pushed down, right? So what essentially should happen is price should push up to this point, reject this point, some point, and start pushing down, heading back down to this last low right here. This is what it would do. But if you push play on this, right, look at what's gonna happen. And this is because a lot of people are more just in the market, more advanced than you. Okay, this might be too slow. Huh. All right, let's see. Well, okay. So essentially right here, right, this would be your entry. This would be your entry, right? And then you'll be trying to take it down to here. So you'll probably try to put your stop loss. You'll probably try to put your stop loss here. This your short. This is how you would have been taught, right? You would have put your stop loss behind here. Remember, it's a lot of stuff that control the market and actually moves the market, not just what, a lot of these teachers teaching y'all, not just what, it's a lot more simple than what all this commotion. That's why I'm teaching all this free, so that can't nobody sit up and say, you charge me for this for a course that, that's free online. Like, so this type of stuff, it's free, right? But for my time, my methodology, and my psychology in this, it's gonna cost you a couple of dollars, right? And it's okay to invest in yourself. Always remember that too. So, but look, we're gonna push play, right? We're gonna push play. Now you see how that just dropped, right? So this is your play. You're gonna try to pull. You know what I'm saying? You're like, okay, I want to run this play. Boom. And now you're running this play. It's looking good for you and everything. So it's closing underneath the 0.5, right? So, but what you're not looking at in the play is that it's a trend line now, right here. So you got to understand that, okay, you got to respect these trend lines too. All right. So now you're looking at the trend line. You're saying that it's broken. So it's looking nice. It's looking nice. Right, but what you got to understand is you got to follow these trend lines. So now, boom, it hit you out, it stopped you out. So we're gonna stop it right there. Right, so boom, as you see that it stopped you out, right? Now you're mad, now you're pissed, right? Because you just learned Fibonacci off of me, and you would have been like, man, he said the Fibonacci worked when you see the drop, da 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 da. But that was an example of a no-no, because at the end of the day, what these markets do know how to do is this. Let's remove this. They know how to play a trick on you too. So this is what they'll do. So now you see how this price is doing this and pulling back. What they'll do is they'll come here, boom, and what they'll do is they'll put a Fibonacci like here around this level. Right, now let me show you how this play out different. Okay, so they'll put a Fibonacci here, and just to blow you out and make sure that you're out of the water, just to make sure that you're out of the water. Here we go. Hold on, let me see. Oh, yeah. Just to make sure you out of the water, they blew you out of the water, they'll go for something like this. Long position. All right, they'll go for something like this. All right, they'll go for something like that. Right, and then what they'll do is, so you seeing it this way, boom, and they following the trend line, and they following everything else that they know how to do that you don't know how to do, right? And so now they letting this 0.5 hit or this 681, and they pushing it up here, and they'll sit up and take a play like that on you while you thinking and knowing that, hey, it's gonna go down to the downside. It's gonna go down to the downside. All right. So now they're gonna run this little play right here on you, because you're like, oh, you're gonna get back in for another sale because you're like, man, that's gonna sell off. Right. And so they'll run. Oh, my bad. Right here. This is what they'll do on you. My bad. I'm tripping. Moving too fast. So this same play, we're gonna Wait, we're moving too fast. We're gonna go right back here in this same play. I'm gonna show you. Okay. Yes, good. And while you running that, so when you was running that same play, my bad, I had to reset it real fast. So while you running that same play, because right, you seen this first drop, you thinking it's gonna drop down to this side. That's what I was getting at, yeah. And then I was supposed to back up to this point right here. So if y'all want to just rewind it, this is the same thing right here. So so we come back to this point right here, and while you running that play like this, right, we'll put it back so we can see it. All right, fresh replay. Right, you running that play like this, right? They running the play. So this the play you running to get back down to this point, right? But it already broke you out because they was running this play. So here we can do it all over again because I don't want nobody to do that to me. Oh man, you said I want y'all to see it for sure so y'all can understand. So stop back behind here, boom, and you headed down here, but it's gonna take you back up here to stop you out. And why? It's because they running this play on you. And so this is what I see over and over again. And this is what makes me be a little more patient when it come down to charting up. So look, they running this play on you, my bad. So they running this play on you. For a long stops behind here. And see, like this guys, I'm getting in real deep and technical, but I really want to show you guys this shit that y'all can learn this and y'all can be making a lot of money too. And I want to show you mistakes so you don't want to think like everything be all glitter and gold because certain things look good. But like I said, they was following this trend line here. And then boom, they was running this Fibonacci on you. So everybody's using the Fibonacci. You're not the only person that's able to use the Fibonacci. So they running this from this point to this 100% and this pullback, and they're gonna catch price at a discount at the 618, 61%, or the 50%, and take it back up to this point. And then and so this is what I see over and over again. So boom, as you guys can see, you running other play. You trying to get the sell off. You want price to sell off. Boom. While they're running this play on you. Right? You see what I'm saying? Boom, shooting up to at least the 0.27 or the 3.82. You see what I mean? So be careful when you're paused it. So be careful when you're using. So yeah, any of these green zones are take profit. So the negative 0.27 or the negative 3.82 or the negative 0.618 was all take profit. Boom, it went to the negative 0.382, right? So you see what I'm saying? So now you was still running that play, not saying you was wrong, because see, now you're like, damn, was I wrong for running the field like that? And you wasn't. And then somebody else would come in and they'd be more savvy with it, right? And then so they'll let this play run out. They won't even get in on this play. Boom, they'll run this play out. They'll be looking at something like this. Hey man, price retouch this area right here. We have a head and shoulder. So what they essentially will be waiting for and be looking for in advance is this. So like I said, you got to have an eye for this, but it happens. It happens. Pause. Like I said, they'll be looking right here saying like a head and shoulders pattern, but they essentially want to touch or hit somewhere in this area. Right. And then they will set up their trade like this. They will take the Fibonacci from this point down to this first point here. Right. And so that's all it needed. So now they'll be essentially looking for a hit anywhere around this area, around the 618, any of that, right? So this is what they seeing, and then this is what they take profit look like, and this is what this trade look like. They'll be looking at it like that, and they'll be taking a short position. They stop to be behind that first head, boom, and they risk a small percentage, right? Because they're gonna be looking for a big gain. So this how they risk to reward. Nah, plus it'll be other stuff that they're looking for, right? So they have other confluences, guys. So don't just literally go off the go off this, right? Because remember, it's three parts to trading, right? So it's technicals, right? So this is the last part that you're going to be focusing on after you do all the other two parts. So technical, you got fundamentals, right? So fundamentals is key, right? So a fundamental factor is going to happen in this situation where somebody would have been looking for this and just would have been patient and just would have waited for this setup to occur. And then they would have took a trade as opposed to trying to gamble on every single thing that's going on in the market. I promise you guys, this is what makes the 1%er out of whatever you're doing. They're scheduled. They're sticking to something. They're only trading certain things. So if it does not happen, then guess what? Even if it happens too early, they miss out. They'll rather miss out on that type of trade than to have a perfect A1 setup and then actually take that trade and then win the amount that they wanted, risk the amount that they wanted, and continue to be able to trade throughout the trading week. All right, so now I'm just telling you all this because it'll just keep you more focused. All right. So now, boom, they come like that, and then remember, it's other confluences in with this. So you got key levels, you got all this stuff that factors into play. All right. So now the 382, we got the head and shoulders, we got a double hit here and here. So this is why certain people would have got in still right here on this point, double. And depending on what was going on, depending on what level that is, all of that matters, right? And then boom, this is what so you can get a rejection off of any of these areas when you're using the Fibonacci, okay? The 0.5, the 618, the 786, right? It does not matter. You can use any one of those numbers, right? So you see the rejection, the double tops, and then as you see price melting. Plus, it was other things that were going on to give them that type of confirmation. Boom, that they take profit, easy money. It wasn't hard or anything. Right? They used the Fibonacci, and they were able to catch this trade or connect to this trade. Right? All right. SMSFXMentor.com. Right. So if you got any more questions, right, and leave it down in the comment section. Right, and we'll try to get you with the best videos, man. We're gonna be dropping bangers though, man. We're gonna try to do this every single day. All right. So be on here. If you want to go check out more, you want to get more detail, SMSFXMentor.com, right? You can go ahead and check out everything that I got to offer, all the free content. I'm trying to help as much as I can possible because we're in a world right now that we need multiple streams of income. We need different things to be able to provide for our families, be able to take care of things that we need to take care of. All right. Not saying you got to get rich off of any of this. You ain't got to get rich off none of the strategies, but at least try to create your own paycheck. Like if you make $1,500 a week, try to make $1,500 a week in the market as well, and then see how that work out for you. And then boom, grow from there, grow from there, grow from there. And then, like I said, you keep coming and taking it and looking at all this free knowledge and using that to your knowledge. And then when you get serious and play around with it on demo, whatever. As soon as you get serious, get you a mentor. That's sentimental value. So my bad. All the three things that you need to be knowing is sentimental value, fundamentals, and technicals. All right. Technicals is very, very much last, right? You can learn all the candlesticks in the world, every strategy in the world. If you don't understand all three, you're going to fail. So sentimental is joining a group, SMSFXMentor.com, right? We got a live group. We got a group on Discord. We got all this type of stuff that's going on. Surround yourself around people that's doing the similar things, the same thing. And then that way we can keep ourselves up to date on what's going on. There's no real wrong answer, right answer, because things can be going your way and the news can come in and make it go the opposite way. Things can be going the right way, and then the things on the news can be saying everything right, and then price can still go the opposite way, or still take off, or still be at a halt. So remember, consolidation is nothing but liquidity grabs. So do you want your money stuck in consolidation, or do you want your money working for you? It all depends on how you want to trade as a trader. Sometimes you can get into nice little scaps when price is consolidating, but it's very, very much more riskier than when times are actually being, justified, actually right. And so All that type of stuff is a big difference, man. And that's what like I said, I'm telling y'all from this from heart. 6 years I'm doing this, losing money, gaining money, it bad and the good, right? And the ugly. The most times I ever lost the most money is when I was being antsy and wanted to do it and needed it. So I was just trying different things. But when I stuck to my trading plan and stuck to everything that I need to do, I was able to become consistent. All right. So consistent over just gambling. Gambling is fun. You do make lots of money, but the risk is not there. So when you have to risk things the right way, it takes a lot longer step than it would, you know, risking and doing everything else, like, getting the Rolexes and all that. A lot of that comes with risk, or a lot of that comes with good credit. A lot of that comes with more money to start with. So you got to remember at where you start at, what's your point, right? So that's what we do at SMSFXmentor.com, right? At SMSFX Mentors, what we do is we take your schedule down, right? So we want to know who you are, what you do for a living, what's your schedule, what do you have to invest. We want to know what you have to risk. We want to know what time and what time frame are you able to give to the charts, to give to the news, to give to sentimental value, talking to different people about what's going on, being a part of the conversation. How much time do you have to actually do that, right? What's your schedule looking like? What time do the kids go to school? What time can you check out the charts? What pairs should you be trading at this time? What session is this time? Right? We go over things like that, right? And then what we do is we come up with a basic plan that actually it'll all be surrounded by you. So guess what? It'll be very, very much unique to you. That strategy that we will come up for you will be specifically for you, your time frame, what time you like to trade, all the way down to exactly where you should enter in, what time frame you should enter in, on what time frame should you analyze, top bottom analysis, right? All that good old stuff. Plus, we give out a formula, guys. So it's not just some type of strategy you're finna get. And it's gonna be you're gonna blow up in the middle of of the night, right? This is gonna be something that's gonna be very, very cost effective. It's gonna be something where you're gonna be able to do this and stick to this plan to where you can grow to a certain point. You're gonna be able to go get funded. You're gonna be able to understand that the market is not a gamble, it's not a game, it's actually knowing what reasoning behind everything that you're doing in the market, right? Everything has a reasoning right behind it. It's not just going up and down. They're not just moving it here and there. They're not just doing this and that and the third. It's reasoning behind everything, right? So that key, that's something you think you're missing. Like, oh, I've been trying this, da da da. It's not that you're missing anything. You're just not understanding who you are and why and how can it work around you, because it's working around everything else. Somebody else that's getting right up every single day. They're walking into Goldman Sachs. They get up, brush their teeth. They look just like you. They didn't go to college for this. They didn't go get a rocket science uh, 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 um, degree just to be able to do this, right? This is somebody like me and you guys. So this is somebody that just going up, getting up, going to Wall Street, boom, doing everything, making decisions, doing everything functional just like us. Not an AI, not a robot. A same person like you. What makes you think that you're not able or capable to understand what's going on? They have a set of rules. They have a booklet. They have something they have to go by every single time to be able to push the market to do this, to do that, right? So what you got to understand is that, look, once you create your own set of rules and create a trading schedule around you and not you scheduled around the trading, meaning that you're always on your phone, you're always looking at the charts, you're always trying to catch the right move, and you're always antsy. It should not ever have to be like that. If you trade from this time to this time, it's always a trade there, guys. It's going to always, the market is always going to be moving in a direction. What you have to understand is you have to come up with a formula, guys. And a lot of you just don't understand the formula because you don't understand risk management. You don't understand risk reward ratios. You know everything about the market. You know all about the glossary, how the definitions. You done been in 1,000 groups. You done got the best trainers, and you still not doing so great, right? So you got to understand what works for you. What is you? How you? If it's an extra $100 a week, extra $50 a week, extra $200 a week, what could you do with that? If you already got everything else already taken care of, what would you be able to do with an extra $300-400 a week, $200 a week, an extra $100 a week? What would you be able to do different? You see what I'm saying? Would you be able to get that extra gas? Would you be able to maybe go to lunch? Would you be able to right? And then that stuff adds up. That's the important part, because now that stacks up, and then now you can use that as it stacks up to invest more, or to be able to go fulfill certain things that you need to fulfill. What I learned reading the book of The Richest Man in Babylon, you have to live by the 70-20-10 rule, no matter what. You have to see, as a person in life, you have to have rules and boundaries and shit that you go by and stand by. Well, this book shows you pretty much how you need to live off 70%, 20% to try to pay back debts, and then 10%, right, that you need to put up. And for like not even a rainy day, literally put that 10% up. Everything that you make, put up 10% of it. It's yours to keep, right? So this is what you need to do is you need to be able to stack that 10% off to the side. And then you need to be able to say, okay, boom, I'm gonna use this for sentimental value. I'm gonna go invest into sentimental value, because if I get around sentimental value, around people that's thinking the same thing, doing the same thing, at least I can know and see what's going on in other people's minds, other traders' minds on both sides. Because if I'm thinking this side, it's going by, and then another person is in there showing their side of why they thinking that it's going sell, right? Then that way I'm able to be able to create a formula to be able to hedge myself in case whatever happens, right? So like you guys gotta understand that it's never bad to hear information. A lot of people get angry and say, you know, you're not the teacher, you're not this, and you get mad at somebody that's trying to show you that, look, dude, you can make a couple extra dollars. And you don't have to do no fuck shit to do it. You don't have to do nothing bad, nothing crazy. You can literally make a couple dollars and do what you need to do, dude. But you need to understand that it's gonna come with a process, and it's gonna take time. But everything does. No matter what you're doing, bro, that shit gonna take time. Even if you're doing some bogus shit, some bullshit, that shit take time. You think a scammer got it easy? Think somebody that's doing some crazy shit got it easy? They got it rough, the roughest way. So that shit takes time. They had to get to a certain point. Remember, everything gonna take time. Basketball player, NBA professional, right? You think that he just woke up one day and I'm hopping in the NBA. He had to do some hard work behind it. All right, so everything takes time. Remember that it's never something easy. If they say it's easy, then that's cap. Because first of all, you got to uncondition your mind to recondition your mind, right? So you have to unlearn and relearn. And so that way you'll be able to take all that old stuff out of what you can't do and what you think that you can't do and won't do, and start turning it to can and will, right? And so once you get down to that factor, understanding who you are, I believe that Forex can work for anybody. All right. So SMSFXMentor.com. And I already went over my time, man, but I just want to show you guys how to use the Fibonacci. Don't just use the Fibonacci. Don't listen to people saying, oh, I just use Fibonacci. Some of this stuff, and that's in between, some of this stuff is just air holes. All right. And it's just liquidity grabs, and price going to do what it do. All right. So once you start understanding, you'll catch on, you'll get between the lines, because, you know, like I said, I'm not a gatekeeper, guys. I'll always give you the information. I already told y'all about this 5-6 years ago, all the way through and out of it, right? So it's not no secret. It's not like that, right? Whether you believe or whatever, that's not up to you. It's you against the market. It's you against you. Your pocket's gonna be how your pockets want it to be. You can choose to be whichever way you want to be, but you can also choose a different route. So, hey, look, I would say get on this bandwagon, choose this route, check it out. If it's for you, it's for if it's for you, it's maybe for you. If it's not, right? But pass it on to somebody else, it may be for them. Or they may have 1 hour in time for it, and then they can start making money in a 5-minute, 1-minute time frame every single day. All right. But SMSFXmentor.com, let's get it, gang.